Okay, guys. We're gonna go to Ask Scruff. Now, this is it's one of those questions that's quite difficult to explain very quickly, but I'll do my best. Okay, so it's for Josh. A little salute to you. Been looking at the DAX, and my buy streak showing a strong buy, but the euro basket of euro pair seems to be going down. I'm staying away from this because I don't understand correlation. Oh, okay. Well, basically, let me kind of try and show you. If we look at, say, a window of the world, okay, the theory is there's direct correlation, indirect correlation, okay? So direct correlation is gold is directly correlated with the US dollar. So if gold is going down, in theory, the US dollar is going up, and it's to do with cost of service and cost of product, etc. Okay, and it's also what's called risk on, risk off. This is classed as a safe haven. So if you're unsure about what's going on in the stock world, you put your money into gold, sort of thing. Okay, and dollar is closely connected to it. So if that goes down, that goes up. Now, again, the US dollar, with it being the base pair here, is the secondary pair with the euro and the pound. So if that's going up, in theory, that should be coming down, like the seesaw. Okay. Now, if this is coming down, that means the business is cheap. All right. You can buy shares cheap for euro. And where is that correlated to? It's correlated to the DAX. So if that's going down, which it is, the DAX will rise. And that's kind of the correlation. But these are indirectly correlated. These are more correlated to this one in the top corner, which is the US 500. So that's what they'll mainly follow. Okay. Now, if I just sort of flick it over onto the indices charts, if you look at these, there's the 500, and they all follow roughly the same movement. So if you see a huge spike here, there's a high probability it's going to come over into these as well. So that's a form of correlation. It's basically looking at one product to gauge against another one. But the rule of thumb is the dollar is correlated with gold. So if gold's coming down, that's going up. Then you look at the correlation between USJPY against, say, euro dollar, pound dollar. And again, if that's going up, that will push that down, because obviously that's what's happening here. And then whatever's happening here will loosely move over into the stock market, because if that comes down, it means it's cheap to do business with euro. Therefore, they're buying more German stocks or euro stocks, and that'll move up. And that's kind of a quick watered version of correlations. Can you use it to trade fully? You can. It's more to give you just a feel of what the market is up to, as to what's going on, and then drill heavily into one product at a time and then make your choice. So if you look at it and you think, well, there's weakness in the euro, therefore there can be strength in the DAX, and you believe that the DAX is then buying, it just adds a little bit of weight to it. I hope that helps. Catch you soon.